All right, well, welcome to the stream, guys. Appreciate your time. I'm not sure how the trading day went for you guys. Are we green? Are we red? Are we break even? Iman, what's up? So for me, today I took a loss. I took some time after the loss just to look at it again and see if I broke any rules. And I think I did break a rule, but it still wouldn't have mattered because the trade confirmed and then it would have went to stop loss anyways. But I did break a rule of mine. I'll go over that in a sec. And then, yeah, we'll just quickly have a conversation about like how to take a loss on the chin, right? Because we're all going to take losses. It's never going to we're never going to be perfect, right? So we'll take a look at that as well. So let's start off with the New York session review. So this morning, showing up to the charts. Maybe I'll show it to you guys this way. Might be easier. So this is basically what I was looking at. We had a very tight range. I think it was like just sub 300 points overnight, like 288, I think. And you can see, I mentioned like it looks like a search and destroy model, right? So the reason I said it's a search and destroy model is because you got a very tight range on Asia, and London is basically sweeping Asia high, and it just missed sweeping Asia low. But I think it's close enough where we could say that it is a search and destroy model, which basically then tells us that we're looking to trade the extremes of the range back to the median, right? Back to the mean. So with that being said, sorry, one sec, guys. Okay, I'm in a live stream right now. Can you go up, please? Seriously, can you go up? Thank you. Sorry about that. Okay, so yeah, once again, at open, looking to see if price will sweep, the extremes of the range, and we're looking for a trade back to the mean. So that could be a London sweep on the high, buy side liquidity, look for a trade back to EQ, London low, back to EQ, that type of thing, right? So until that happens, all you can do is just wait. Okay, so we can see here about 9:30 at the open, we do get the sweep of London high. So let's take a look at what happened at London high there, because there was a setup, and I just want to explain something about it. Let me just back this up. Okay, so we get the sweep. And the one big issue I have when we start running up a price action too quickly is it leaves behind FVGs. And when FVGs are left behind, what that's basically telling us is that these become non-singular setups. Ideally, the plan is that we always want to see LRLR in the direction of where we want to take that trade. So I'm taking an IFVG trade. So I want to see LRLR because I want price to sweep that liquidity. When it comes to FVGs, these gaps, there's just no telling which gap is going to create a reversal, right? So hence we call it non-singular. I had talked about this in the last stream. Pretty much talk about this in every stream. So looking at this, we get the sweep, and we can see that there's FVGs here. So let's just hit next and see what happens. So we start getting aggressive price action, and then we start getting price moving a little bit higher. I'm just going to go to the 4 hour for a sec. I just want to quickly mark off a couple of other levels that came into play that were valid. There's this one right here. And there was another one right here. So we have the hourly level right there. Let's go back to the 1 minute. Now, this is a great area to see a short, right? We want to see price, once again, sweep the extremes of the range, move back to the mean. So let's hit next, and then we get one of these. So this obviously isn't a good scenario to happen, right? Because you're getting like a spike candle. So I'm not sure if there was news at that point. I know that there was conversations about, peace and things like this again. However, when you have a candle like this, I can't take an entry on this, right? It doesn't make sense. Two reasons why. Well, we've already swept some sort of nearest liquidity. I already talked to you about it being non-singular, and then we're really, really close to the daily EQ, which basically means I'm not going to take that trade if price is too close to the daily EQ. Okay, so continue to wait, and then we get another sweep. Okay, so we get another sweep up here. I believe there's another hourly level there, if I'm not mistaken. Maybe I'm wrong. Okay, so it looks like it's the same level. So this level's already been used, just a heads up. And typically when that happens, I'm not really too keen on taking a secondary trade on, especially when you already had one move that's already confirmed. Okay, so this level's been burned. London high's been burned. We got the H4 buy side liquidity level now up here. And there we go, we get a sweep. Now, this is looking pretty good. When we look at it from this lens, okay, we have the IFG right here. It's about 8.5 points in size, okay, and I'm not sure if there was SMT. I think there might have been, maybe not. We'll see. Okay, yeah, there was. So this is looking really good. The problem is we get a rejection and then price moves higher. Now, I'm okay with this. We get the confirmation, so we're having a good reaction off of the H4 buy side liquidity. We're getting strong momentum through the IFEG. And what that basically means now is there is a potential for a setup here, right? Now, because the IFEG gap is pretty small, for me, if I were to have taken a trade like this, and given the volatility, I probably would have just either set it somewhere like around here, like 40 points, and I would have gone a little lower. Now, the reason I did not take this trade, however, is because when this trade confirms, if I go to ES has already started to tap the daily EQ. And as I often talk about the daily EQ, it's a form of support and resistance. So if price is bouncing off of this level, what that means is if I'm trying to take a short on NQ, this can just completely reverse against me. So even though this looks really, really good, we got, once again, good reaction off the H4 buy side liquidity level. We got strong momentum through the IFVG. It confirms it. We got SMT, bearish SMT with ES. These are all signs of an A+ setup. The problem, once again, is that ES has already tagged the daily EQ. And if ES V-shapes out of the daily EQ, that means that this NQ setup is going to hit stop loss immediately. So let's hit next. Okay, so then you get one of these. Now, right here, this trade would have worked out based off this setup, right? There's my 1R. I like to take 1Rs. This would have worked. So that trade is missed. If I go back to ES, though, I want to just show you the bounce, right? This is part of the problem, and I've taken trades like this in the past and been burnt, so I just stay out of it now when this happens. But, you know, that's trading where you're going to have positions that you want to take that you don't take for X and Y, Z reasons, and you stay out, and then it still goes to TP. And as a trader, it's really, really hard to work with that because we get that FOMO, we get that panic, right? And it's important for us to kind of just like be calm, be cool, be chill. Just remember why you didn't take that setup, right? Because you're trying to take setups with criteria that puts you in the highest of probabilities. You don't want to just take trades that set you up and it's like a 50-50 long shot, right? Because 50-50 is like gambling, right? Anything can happen. So knowing in the past that this has created problems for me when I've taken a trade, I decided to stay out of this trade. And even though it hit 1R, it is what it is. I got to let it go. And we get some more price action like this. So if I did not take that TP there, I definitely would have been stopped out. Let me go back here and, oops, let's reset on me. And I'll just keep hitting next. Okay, and then we get one of these. So we start to see that bearish follow through in the price action. And it's unfortunate because, like I said, ES was tagging the daily EQ. And you're just watching this. Now, the next thing I'm looking at, I just want to take a quick peek at ES. Once again, there's ES having enough space to move lower again, right? I decided to just stay out of the trade and wait for something else. So the next thing I was looking for is a move off the daily EQ. I thought, hey, maybe if we see a good reaction off the daily EQ, we can take a long, right? Because we're looking at that extremes, right? We're looking for sweeps off the extreme, back to the mean, take a trade off the mean perhaps, move back to the extremes, something like that. And if I go to the 2 minute, so I didn't really like the 1 minute. And then when I looked at the 2 minute, I had a problem with the 2 minute. I think it was because it was just way too big. Yeah, so this was about a 51.25 point FVG. It's just a little too big for me. And the reason I say it's a little too big is because look at how far away it is from the daily EQ. Ideally, when we get these bounces off the daily EQ, we want the setup to form as close to it as possible. Not like, in this case, it was like, almost 100 points away. You got to keep in mind with logic, right? Like if you want to take a setup that has a risk factor where, you're dealing with 100-point stop loss and you're trying to get 1R, well, you're basically saying that to get 1R, you need 100 points to go in your direction. And in this situation, because the trade had already moved 1R, like we would need a lot of aggressive price action, right? For me to even get 1R or even something like that if it were to have confirmed. So it just didn't make any sense to me. The good news is I didn't have to have too much FOMO about this because if I just even set this up for you, you'll see what I mean. If I hit next, you can see how price is just literally chopping around, consistently rejecting off of the high here, right? So when I start to see that, that's telling me per my rules that we are not getting, even though we have strong, like a good, even though we have a good reaction off the daily EQ, which is right here, do we have strong momentum confirming the IFEG? And looking at this does not look like strong momentum. Multiple rejections. Look at the wicks. I don't really like it, so I stayed out. And there's no other reason than that I stayed out. Just because in the past I've seen what has happened. The other thing too with these 2 minute setups is I like to wait for confirmation. So I want to wait for that 2 minute candle to close. I really don't want to enter early. And I had done this later, and I'm going to show you that in a sec. So let me hit next again. And then you can see how that would have been a stop loss, right? If I had even FOMO'd in there. So once again, we're back at the daily EQ. Now here's another thing about the daily EQ. I personally do not like taking daily EQ trades until, or unless it tags it like the first time. So that means like price really trades against it and then comes down. Something like what happened here, right? The fact that it's now come down a third time, I just really don't like taking those types of setups. I'd rather just wait. So even though I had this marked off, there's a setup right here. I think there might have been SMT at this point. Yep, there you have some SMT forming there. I just thought it's not worth it to take this trade or even consider it. So what happens next is I'm literally now at a point where I'm waiting for the extremes of the range to get taken out again. So if I show you what I'm talking about, that would have been, what's up, Harry? That would have been this H4 right here. This is like a private class for you guys today. Private session. There's only a few of us. So if you guys want to talk about anything else, feel free to let me know. So we have these two H4 buy-side liquidity levels right above here. And we also have Asia and London low down here. Okay, so I'm just going to mark London just because it's pretty tight with Asia. But we know that that level is right there. So London low. I appreciate your time. Appreciate your time, my friend. And I had mentioned this in my thread. If you guys are following it. So here's that London session. Let me go back. Yeah, we talked about all this already. We had orange folder news at 10. Keep looking for this. Where is it? I made a note about it. Right here. So at 10:15, I had made a note and said, looking for H4 buy side liquidity to be swept, or I'm looking for London low or a sell side liquidity level to get swept out the low. Anything that happens in between, I just can't be interested in it, okay? Like I said here, I'm not interested in daily EQ setups now because of the amount of chop around it. Okay, so let me go back to NQ, and now it's just a matter of waiting to see what happens. So I had alerts set, and I was just working on some other stuff, and then we get that. Okay, so now we have a sweep, and when I looked at it on the 1 minute, the big problem I had with this was that, once again, just like that other setup, the FVG is way too far away on the 1 minute from where the London low is. So I moved up to the 2 minute just to see what I was dealing with. And even though it's like the same level, this looks way cleaner to me compared to the 1 minute. So I marked this off, made it stacked. Okay, and this is basically the setup that was at play. If I go to ES, I just want to show you that ES had also swept London low and Asia low. So what that means is that we got correlation, right? And ES has a good distance away from the daily EQ. So that means if NQ wants to go long and move bullish, we need ES to have enough room to get to that daily EQ, because we all know, once again, the daily EQ works as a support and resistance level. And the last thing I want to do is take a trade where price action is too close to the daily EQ. Let's go back to the 1 minute. Let me go back to NQ. So this is what the 2 minute setup looked like on the 1 minute, okay? So I'm just go back to the 2 minute, and essentially we got one of these, we got one of those, we got a fake out. Now, I will tell you, in my executions, I screwed up today. I entered on FOMO here, okay? And then I dollar cost averaged into my position a bit more. So then I was in a full-size position today off these two candlesticks. Now, I talked about breaking rules earlier. The reason I would say I broke a rule today was because I entered before the 2 minute confirmed. I always tell myself, don't enter the trade until the 2 minute confirms, no matter what. So I already knew when this was happening that if this goes to stop loss for me, it's because 100% I broke a rule. Obviously, it didn't confirm. But on the next two candlesticks, we get confirmation. Now, this candlestick right here and this candlestick right here gave me some sort of hope that this long could work out, because all I really needed to see was for price to essentially just literally go to the daily EQ or somewhere up here, because the second I saw price go up here, my TP would have hit and I would have had my 1R and I would have been done for the day. It's only 48 points. Given how volatile this market has been, it seemed pretty good. What's going on, Zanu? So, Harry, sorry, question, man. We'll talk about that in just a sec, brother. So, I'm watching this setup. It confirms. The IFVG indicator confirms it. I don't believe there was SMT on this trade. Yeah, there was no SMT. There was no higher time frame gap that price was trading inside of. But nonetheless, this is a solid play. So even though I entered incorrectly at 11 and 11:02, what ended up happening was that this did confirm. So I would have entered this position regardless. Now, my stop loss placement, I probably would have had it. Where would I have kept it? I can't. I usually like to keep it below some sweeps. So like you have something like this. So I might have had it probably around there. And that means 1R is still about here. And that was what my plan was to take that TP there. The problem is we get one of these and one of those. And that's how the cookie crumbles, you know. Not every trade is going to be a win. I've taken trades like this so many times where it goes straight up, right? It takes 1, 2, 3 candles to hit stop loss, but I've seen it take 3 candles to hit TP, right? That's 6 minutes worth of trade time. Unfortunately, this went to loss. And the second it went to loss, that's okay. So just to kind of recap this whole thing, I made a mistake entering at 11 and 11:02. This didn't hit stop loss prior to it confirming, so technically the trade was valid. Do I want to really take trades when there's a lot of chop like this inside of the FVG? I mean, ideally no. And I said this in the last live stream that when price starts to chop around inside of that FVG before it confirms, the only way I'll really get interested in it is if I start to see strong momentum build especially if it's holding the low. In this case, because it's a long, it was holding the low pretty good. And I mean, you got a reversal pattern right here with these 3 candlesticks, right? You got a bullish engulfing candlestick, and then the next candlestick confirms the IFEG. To me, when I see that, that's showing me some strength. That's showing me momentum. I can only go based off probability. So probability is showing me that we got strength here in the market. If I go back to ES, ES, on the other hand, actually, let me go back here, and because this already hit stop loss, let me just back it up to right here. This is what ES looked like. Okay, so I will admit, ES did not look good, and I did actually say that right here. Let me find what I said. So there's the sweep, there's the 2 minute, and right here I said those wicks look ugly on ES. This is what it looked like. Okay, look at those wicks. That doesn't look really good. That looks like heavy sell pressure, right? So with that being said, let me go back up here, and okay, there's the confirmation. To me, it was still worth the trade. It was still worth it. So that's the reason why I still would have taken the trade. You know, key levels are swept. Took the loss on the chin. It is what it is. Can't do anything else about it. Okay, you got to just take the trade and move on. And we're going to talk about that in a sec. Harry, let me see what you have there. So you asked, if possible, can you review the EMC model? I tried looking through your guys' posts and threads. I still don't understand it. Don't plan on trading anytime soon, but I'm just curious. The EMC model. Oh, yeah, that was like, man, that was a long time ago when we first started looking at IFEGs. When I first started learning about IFEGs, when 2 Degrees released this indicator, I know it was in partnership with Dodgy at the time, believe it or not. This indicator was formed through a partnership with him. I think they had a fallout. 2 Degrees has kept the indicator, and I think Dodgy has created a brand new one. And you know, I'll know Dodgy's like IFEG legend. But the way the EMC model came out was that our guy Eat More Chicken, who's an absolute beast on the chart, we started kind of all learning this IFEG thing together through another trader. So if you all know Lumi Traders, do you know Lumi Traders? I'm sure you guys all do. So Lumi Traders had started using the stat map with the IFEG model and kind of put them together. So we started calling it the EMC model because we noticed how Eat More Chicken was rocking it. And at the time I was trading unicorns, and basically me and a couple other people got really interested in how fast the IFEG model played out. But once again, we weren't using liquidity like this. We were using the stat map. And the problem with using the stat map is that the stat map can give a lot of false signals. And even though we had a lot of good success with it, we also had a lot of terrible trades. So much so where it's like, you know, you start blowing funded accounts, and, you know, it's just, you start realizing how many losses can start stacking up against you if you're not careful. So when it was good, it was really good. But when it was bad, it was like really bad. So we only called it the EMC model. It was just kind of playful, to be honest with you. Since then, I would say EMC has obviously evolved as a trader, and he's using liquidity similar to me. I think he uses a lot lower time frame liquidity compared to me. So he might be using 5-minute and even 15-minute, whereas I'm only using hourly and 4-hour. Where can you find that? I don't think you can. I think it's long gone. It's not available to be seen anymore. Yeah, the old Discord might have had it, perhaps. So I know some of you guys weren't there, but I used to have a thread there, and that's where we all used to hang out. And, you know, it was a huge party in my personal thread. But, you know, a lot of things changed. Truth be told, though, I don't think you guys are missing much. Honestly, I really don't think you guys are missing much. Because that was literally what it was. So, like, if I were to show you what I mean, let me put a stat map on the chart here and shut that down. Okay, so the other thing too was these are daily ones, right? So we were using 4 hour um, blocks. So it looks something like this. So we would use 4 hour windows, and we would basically be using the stat map to put trades together. So if we were trading, off these levels, we'd be looking for longs. If we're up here, we'd be looking for shorts. It was literally that simple. But once again, you can have many hits off of these levels and start providing fake signals and things like that. But that was it basically. So like a good example could have been something like up here, right, where you got the 4 hour here, it bounced off here. Now, I use things like non-singular and whatnot, but back then, I wasn't doing that. I was still studying and learning. So what would happen was I would use like something like this, and I would long like from here. Stop loss would go at the bottom, and you'd be aiming for like another key level. So it could be the 4 hour open, or it could be the higher level up here. And look at this. This is a stop loss, right? So you see how I'm saying, like, the losses are there. It happens quite a bit. I think the way I'm trading it now is much better. If I look at my journal, it's definitely 70 to like in the mid 70s to sometimes low 80% win rate. And if you go back through my channel and look at all the trades I took and share, like, it all adds up to my journal. Like, it's all there. You can tally it up. You'll see it's the same thing. I share the wins. I share the losses. It is what it is. Yeah. So this got me on that 1 minute close at 11 a.m. Lucky me, it was an eval. Yeah. I'm assuming it was this right here. Yeah. Once again, it's. Oh, not this one. Down here? Oh, this one here. Yeah. Yeah, okay. Yeah, I personally, I think it's a valid trade. I mean, ideally, I think the only thing I would say that maybe sucked about it, without looking at ES, would have just been that. Let me just go back to this for a sec. Let's get my settings back together. Okay, so I think the only thing, once again, I think that kind of sucked about the trade, if I were to think about something that sucked, it just would have been maybe the distance in terms of how far away price set up the IFEG compared to where the sweep was. Similar to what I had mentioned up here, right? So if I show you what I mean, this is already about 78 points, right? The thing is, to me, when I looked at that and I took that into consideration, I thought it's not 100 points, and we didn't sweep this right here. This was like my line in the sand that I had made for myself. I had told myself that if we had hit this level right here, which looks like equal highs, right? If we tag this level, then either this trade's cooked if I haven't got an entry, or I'm not going to take it if it confirms up here because it's too close to the daily EQ. But because it confirmed here, the only sweep that really happened was off this level. And I thought, that's not good enough for me. I think maybe I'll take the position. The second this level gets swept, either I'm taking profit or I'm definitely moving my stop loss to break even. But once again, the unfortunate part is it just went straight to stop loss. And as I showed with ES, these wicks were really not good. Like, seeing these wicks was just not a good sign. You know what I'm saying? So was that a clue as to it failing? Perhaps. But you kind of have to go with what you see with NQ, right? Even though ES was showing this, I had to just still stick with the trade from a mechanical perspective. Even though I did screw up and enter early, it's still confirmed. To me, it's a valid loss. I'm just going to chalk it up as being a valid loss and move on with my day because there's nothing to do. I think another flag I'll raise is that I often know that the best setups happen inside of that 9:30 to 11 o'clock window. This trade happens outside of that window. So I think moving forward, I think what I'm going to do is I'm going to literally just give myself like a hard cutoff. And because I always know the best trades happen, like I said, 9:30 to 11. This trade happened outside of that window, and when trades start to form outside of that window, I think what that tells me is we are dealing with lower probability situations. It doesn't mean that it can't work, right? It just means, it's a lower probability situation. So maybe, if like the hit rate is 70 to 80% inside this window, when we start to move outside of this window, maybe the hit rate turns to like 60%, which then means every 10 trades, you probably got about 4 losers. Maybe this was one of those losers, right? So I would look at it kind of like that. So in your opinion, the red flag here is the choppy price action. We had a lot of candles rejecting the close. Yeah, that's true, like right here. But I would also say, once again, like I said earlier, which is why I like the trade, was that even though we chopped inside here, we respected the low. And even though we respected the low, what we then need to see is momentum pushing through the IFEG, right? And you get that. This is a reversal pattern right here. These 3 candlesticks, this is a clear reversal pattern. This is a bullish engulfing candlestick. And then this candlestick right here, even though it's got like kind of that Darth Maul thing going on, it still did confirm, right? Ideally, it did sweep this, which isn't good. Ideally, it's not good. But to me, this was the line in the sand, not this. I didn't think this would play a big role, even though you can see the sell-off here. I thought maybe it had more momentum. But, it is what it is. I actually took another one on ES at 954. Look at the difference in confirmation. Sure, let's take a look at it. ES, 954. Yeah, I'm on the 1 minute, or on the 2 minute. I gotta move up to the 1 minute. Yep. Yeah, you got a stacked move there. Did you enter on this candlestick here, or did you enter on this candlestick? So 953 or 954? I'm assuming it's 954 because you said 954. Yeah. So your setup looks something like this. Right? Entry here. Maybe stop loss, maybe there. Was that a win for you or a loss? Definitely would have had to move that to break even, though. You got early with the win? Yeah. I mean, for me, yeah, like I said, you got scared from the news. Yeah, there was the news. I forgot what the news was, but there was definitely something there. I think if I was to have taken a trade like this for whatever the reason is, I definitely would have got stopped out break even. Because if my TP was, 1R, I mean, I probably ought to have my stop loss about there. 1R is about here. It really looks like it's going to go for it, right? So, but the other thing is, the second that liquidity gets taken right there, my stop loss is immediately coming to break even. And it looks like that would have taken me out break even. So, Bond says you took that too. You got stopped. 2Ls today. I'm a bit mad about this trade, though, because it didn't have it didn't have SMT at the lows, and one of my confluence SMT. Yeah. Yeah. Are you sure it didn't have SMT at the lows right here? This? I think you did have SMT there. Is this what you're looking at? Maybe not. I don't know. Or were you looking for it somewhere up here, maybe? I'm not sure. But I mean, I see SMT there. Yeah, so you didn't really break your rules, bro. It is one of your confluences. So, I mean, you can't be mad about this. Like Olive said, right? Like, there was news there. So, and that's the problem with news. Like, news is going to screw you up. I think the way I would, once again, I'll just repeat this. I think the way you protect yourself, and sometimes it can bite you in the ass, but you do this to protect yourself, is that the second you start seeing like the nearest draws on liquidity being taken out, you have to start either skimming profit, and if you're not skimming, even if you're not skimming profit, you have to move your stop loss to break even, in my opinion. This is how I would do it. You just never know what's around the corner. This is a great example of that. But that's how I would have managed this trade if I was in it, to be honest with you. So I hope that makes some sense. Hope it helps. The market is not in easy mode right now, in my opinion. It really is in hard mode. And because it's in hard mode, we have to adjust our risk. We have to adjust the risk we take, right? With position size, how many trades we're taking. We got to be a little bit overly cautious, right? So how could I have been overly cautious? Well, I probably should have just skipped this trade once again, because just literally because it's outside of 11 a.m. that one little rule alone could have protected me from this. So this is why I'm saying down the road, which means basically tomorrow, I'm literally just going to shut my computer off like at 11. You know what I'm saying? Yeah, even if there's no news, you still have to be careful around 10 a.m. Reversals will come in. Yeah, exactly. But like I said, I welcome that. I welcome that. I want that. I want the liquidity. I want the known reversals. But I need to still see the factors, work out and the criteria to be met. Things have to play themselves out. Ideally, I wanted that short. I'm not going to lie. Not this one here. I wanted the short up here. This was my play. My problem with this trade, once again, was that ES had already tagged the EQ. And because it already tagged the daily EQ right around the time of entry, I had to stay out of it, right? And once again, it's because I've seen in the past what happens with the EQ when ES is too close to it. And who knows? Like ES had made a new all-time high. Who's to say today it couldn't have gone even further, up? And if that had happened, that short is a loss, and the loss actually then starts to come from here. So I felt like I had good patience with observing this. It's just unfortunate because it did hit TP. And, if I was in that trade and I took that trade, I would have been lucky. But then I definitely wouldn't have been in this, right? So hindsight is 20/20, right? So if there's one lesson I can learn from the whole thing is that the window seems to be the biggest problem, was that the trade happened outside of the 9:30 to 11 a.m. kill zone. And the reason I kind of stuck with it was I just thought, we're talking about a trade happening literally, less than 10 minutes outside of that. And I thought, we did sweep London low and Asia low. Like, this could still pump a little higher. If it's going to reverse, it'll reverse. Once again, I'm looking for that move to the mean. Extreme to the mean. That's all I was looking for, was just to move a little bit higher. Didn't get it. That's how it is. So we move on to the next day, right? You're expecting ES to go higher, new all-time highs. Yeah, I mean, that's what we've seen in the past, right? So we can only go based off what we know, and what we know is what we've seen from the past. So that's what gives us the probability. But we also have to know when to shut things down. So, like, for me, I took that loss, and that was it. Because I should not be taking any more trades outside of that window. Like, it's just reckless for me at that point. Better to save the capital, and move on with the day. So that was it for NQ today. The other thing I want to talk about is, so we've got about 15 minutes. Unless anyone has any questions, feel free to drop in the chat. We got about 15 minutes. What did I want to talk about? Not this. I think it would have been about the higher time frame context. Okay, yeah, this. So this candlestick right here is the 6 to 10 o'clock 4-hour candlestick, okay? I just want to show you that in this range right here, okay, right here, okay, we got a clear support and resistance zone there. The way price was moving this aggressively towards it, it really, really looked like this thing was going to flip this. And the reason being is that you have so much liquidity up here, right? You got so much liquidity waiting to get swept right up here. All of this liquidity. So all this had to do was just basically flip, right? And go higher. But it looks like we're getting that initial reaction. So my point is that even though we can have higher time frame ideas, until we see confirmation, in this case, like say a flip, like a 4-hour flip or a 4-hour close above this range, you kind of have to be cautious. Now, what happened prior to price hitting this level? Let's take a look. So this is the 4-hour, and let's just say, if we're looking at, ERL, IRL type process, let me just double check. Did this one sweep? Get rid of this range for a sec. Okay. So let's go down to the 15-minute. So prior to this thing being swept, if we look at it from the 15-minute, right, when market opens, there's nothing really to do, right? But let's just say you were maintaining some sort of a bearish bias today, primarily because we're sweeping old swing highs, okay? So price sweeps into that H4 level. We start to see a reaction from that level. You have London high that's been swept. I'll just make a note of that right here, 15-minute buy-side liquidity. I really think shorts were technically the play. And you can see, like, obviously, in hindsight, we can see price respecting the short idea. But I just want to kind of talk about the technical side of this thing. So the H4 was tagged, which is our higher time frame bias, right? We're sweeping old swing highs, which then means we now need to move to the 50-minute to align 50-minute bearish market structure. And what we get is London high being swept as our 15-minute, right here. Now, the thing with this is that if you're using H4 and 15-minute time alignments, you actually can't be bearish here. And the reason you can't be bearish here is because the H4 levels have not been swept yet. So technically anything prior to the sweep of the H4 level is still, you should still technically be bullish. So to me, to take a short here doesn't make sense from that lens. The second price sweeps these H4 levels up here, now you can start flipping bearish. Okay? So even though the 15-minute London high was here, you could still use that H4 level as your 15-minute. I'll put that in like a quote, like a 15-minute market structure alignment. Okay, so depending on how you're trading this thing, right? That's the part where, you know, if you're trading CISD, if you're trading Unicorn, if you're trading IFEG, whatever your entry trigger is, I feel like if you're, once again, using H4 and then 15-minute and then 1-minute time frame execution, this is where you take the short from. And this is what I was saying earlier, like I really wanted to take the short from there. It made so much sense to me. If I even show you using other tools that I use, so like I use envelope filters sometimes to gauge the range. Look, it's sweeping the range right here. It swept the higher part of the range that I like to use, which literally tells me that we have price exhaustion, right? I've talked about envelope filters in the past. This is like a cheat code in my opinion in terms of like understanding the range, especially when price is respecting it. It gives us a good idea of where we could see that reversal from, right? If I were to use, what else could I use? Stat map in play today? Take a look at stat map. Can't remember if stat map was in play. Let me hit replay here for a sec. So StatMap looks like it just got front run here. So StatMap wasn't in play. But once again, that envelope filter was in play, in my opinion, at that 4-hour level. Let me just go back to my normal setting here. And let's just take a look at this for a sec. I just want to see if there's anything clear that's outside of the IFEG, because I know I like to execute with the IFEG. I already explained to you where the IFEG was for me. It was right here, right? This was the IFEG that I was looking at. Right? That was what I was looking at. This was the confirmation candle at 950. I mean, this is what I wanted. It was just, once again, the ES was at the DEQ. And I had to stay away. I would have had TP right here on this candlestick, literally 4 minutes later. So, but I can't dwell on that. If I was looking for other types of entry models, it's tricky, you know. You got a sweep here. So let's just take a look at this. So you have a sweep here. Just gonna move this back a bit. Okay, so you have a liquidity sweep right there to this candlestick. If we're looking at CISDs and things like that, well, this is your CISD right there. Right, so that's your bearish candlestick, the lowest bearish candlestick post sweep, or pre-sweep, I guess you could say. Well, maybe it's, I don't know. What would you guys use? Would you guys use this as your CISD 945, or would you actually have used this? Because technically this is the one before the sweep. Oh, that's tricky. Had to try to remember some logic on that one. Which one would I have used? I think I probably would have used this one, to be honest with you. Only because this candlestick happens after. Tough one. Maybe it's this one. You know what? I think I would have used this. I think I would have used that one. So if I had used that one, you get some invalidation, but once again, you're probably using a stop loss at the high here, right? Which then means this is your entry. Maybe you're targeting 2R. Often see Matt do this. Wonder if he took the short, and there you go. There's your TP. So if I was looking at this once again from a 4-hour, 15-minute, 1-minute execution, this is probably what that trade would have looked like for me if I were to have taken it using the CISD setup. And truth be told, I think the CISD is incredibly powerful. It does open up your trading range, so you're not getting that quick RR. Like if you were to look at this trade, this thing took this took 11 minutes. That's not very long, but I've often seen CISD trades take like 30 minutes to 50 minutes, right? So these things take time, but price is moving today. You had some drawdown, but you got that news that kind of helped out things perhaps here too, right? Because that looks like a pretty news-driven dump. So anyways, does anybody have any questions about that? I know there's a lot of technical things there, but I was looking at a lot of this stuff today, just kind of observing it. And once again, I'll just reiterate, like this was the trade I wanted to take. And then I ended up taking a trade that I probably shouldn't have taken, but it was still valid. Technically, maybe it wasn't valid because it was outside of the 11 a.m. window. I've made notes about it. I'm in that 28 plus trade challenge, so I'm going to just restart myself back to trade one. Make some notes and move on. So let's talk about the last thing. We'll talk about some mindset stuff. So the question is, how do you take a loss on the chin? So what I got written here, and I'll just make this a little bit bigger for everybody. Oops. Let's move this up. All right, so you guys can see that. So the first thing, this is taken from Best Loser Wins. I probably talked about this before, but I'll keep talking about it because I have to remind myself these same things when I take a loss. It's important for us to separate the identity from the outcome. So it says your amateurs tie their self-worth to a single trade, causing every loss to feel like a personal failure. Professionals view a stopped-out position as a simple business cost. It's not a blow to your ego. So when I took that loss today, I was like, WTF, right? Like, it sucked. But I had to I think the first thing I always look at when I take a loss is, did I break a rule or did I not break a rule? So in my trade today, while I did technically break a rule, I still would have probably entered that trade. So I feel like the loss is valid, and it's just a business cost. So that made me feel a little bit better. It's not a blow to my ego because I'll just show up tomorrow. The other thing is accepting the pain without reacting, right? So our brains are going to scream for like that relief, especially when we want to offset the emotional sting, right? Because it sucks to lose. No one likes that feeling, right? It kind of makes us feel numb. The thing is, in that numbness, that's where the birth of revenge trading starts to form, right? The thoughts start to come into our head like, I got to make it back. I can make this back. Let's make it back. But that's revenge trading. So it's important for us to understand and acknowledge that pain of the loss. Feel the pain. It is what it is. Learn to deal with it. It's part of this thing. But once again, you can't let that outcome, define your worth, right? So you can't let your emotions dictate your next move, especially when you take that loss, because that's when the liquidations start happening. That's when, you start, let's say you are one trade away from a payout, right? In terms of your win-loss. So you're just one win away from a payout, max payout, and you take a loss like this, and then you're like, man, I really wanted that payout today. That's emotions. And now you've already took the loss, and now you're going to try to trade and break rules and go, and your mind's going to start telling you to do these things. And I've had this happen to me. I can't tell you how many times this happened to me where I've had, that situation. And then next thing you know, you're, instead of being one win away from a payout, you end up liquidating everything. And I know this has happened to a lot of people. I can tell you it happened to me. It's happened to me many times. So at some point, you have to remind yourself about a lot of these things. So this is why I keep talking about a lot of these things over and over again. It's not just for myself, but it's also to kind of reiterate it to you, for you to do the same thing. Because if you're not able to accept that pain, if you're not able to separate your identity from your outcome, you're going to end up in repeatable patterns that are only going to cost you in the long run. You're going to start blowing through accounts. You're going to start, maybe you're going to start losing buffer that you have created for yourself on a funded. Maybe you're just going to simply fail evals. Wherever you are in your journey, the end result is always going to be the same: failure. Okay, and failure is just going to it's just like a cyclical process. So the sooner you're able to kind of pinpoint when and where you start to experience some of these shortcomings, and you journal it, you're taking huge steps into self-realization. And that's just the first step. The second step is reminding yourself at all times about that. Before the session starts, while the session's in progress, like in process, and then afterwards. Especially when you have that loss, you have to fall back on these reminders and tell ourselves, this type of information. Because if you don't, it could lead to, like I said, a very bad outcome. And I speak from personal experience on that. And once again, maybe you have also experienced that too. So I'll leave you guys with that. I appreciate everybody's time today. Thanks for sticking around with me. I'll be back tomorrow in my channel, and I'll be trading like usual. Appreciate you guys, honestly. Hope you have a blessed day, and if the weather's really nice, like, get outside, get off the screens. There's no reason to be watching these things anymore, so log off, enjoy your day. Peace out, guys. God bless.